This Bitcoin trap is wrecking traders in both directions. Avoid this. Hey guys, it's Keith Allen. Price action been punishing over-leveraged degens in both directions. Make sure you watch. Make sure you watch this video to the end, because I'm going to show you how to avoid making this common crypto market trap, getting caught in this common crypto market trap, I should say. And, well, I'm going to have to hurry this one along because I didn't realize the time. So we're going to jump right into it. So let's do the customary stuff, if you would. Hey, by the way, welcome. My name's Keith Allen. If you're new to the stream, glad to have you with me. Do me a favor. Before we jump into the charts, just start checking some boxes. Hit that like, hit the share. Share this thing with somebody that you trade with, one of your trading buddies, or better yet, one of the communities that you engage in. And let's grow this channel together. I need your help. I'm calling for it. I need you guys to help me grow this thing. Your engagement not only helps me do that, but it makes this much more valuable for you and much more fun for me. So with that, live chat is open. If you've got questions, I'll do my best to answer them. If you've got comments or insights, by all means, please share them. A high tide raises all boats. All right, let's get into the charts. We're going to talk today about structure. We're going to talk about RSI. We're going to talk fear and greed. We're going to talk order book liquidity, order flow. And if I have time, I'll jump into that BTC correlation embedded alts charts as well. Okay, so let's start here on a really, price is moving again. This is just remarkable, right? It has just been a sequence of what really seems like liquidating shorts, then going back to liquidate longs, and it's a game of ping pong that is ongoing until something actually breaks. And we've been flirting with a breakout, but every time something seems to change and revert back. So I'm going to get into the first chart structurally, and actually I want to clean it up a little bit before I go crazy with all of the indicators on it, so it's not overwhelming for you. And let's just look at some simple stuff here, okay? So let me share what do I got? A daily chart up right here, and we'll go from here. All right. So here we go with a Bitcoin daily chart, and you can see that, well, technically not a lot has changed here. We're still inside this structure. We're still trading below the 200-day moving average. We're still trading. Actually, we've been above and below the structural flag here, the bear flag, the past couple of days, and we've flirted with this now for almost a week. I guess actually technically a week. We had the first candle wicking above it last Monday, so we have flirted with this level almost every day. Faded back a little bit on Friday. Then the weekend got, the weekend games are just phenomenal, right? And then yesterday, big pump on Sunday. Happy Mother's Day, by the way, to all the moms. I hope there's some moms watching this. And then, of course, a rejection from not just the 200-day moving average, but let me show you what else is up there. Strengthening resistance at this level. It is a timescape level here, right? So we have some confluence here that adds to the strength. This is the Q2 open of 2025, and you can see that first weekly open of the second quarter in 2025 down here at the support level, which has near confluence with the 21-day moving average. So this is acting as local support. This was really our last RS flip on the chart, was down at around 78.5, and now we're flirting again above and below this trend line here. So that's part of it here, okay? And yes, this looks bullish, and that's what happens, right? When things look their most bullish is when the most people get trapped, right? And especially, just be careful with the leverage. I have personally started trading with leverage for the first time in all of my years of trading, really just a couple of months ago. And I'm going at it very slow. And I am being very, very cautious about managing that leverage so that my margin ratio doesn't get too high and I'm not at risk of getting liquidated, which at this point I am not, I'm happy to say. And in full transparency, full disclosure, I am in a short. That short is currently not in profit, but I'm in my entry. I've been DCAing my way up my entry. I did actually add a little bit yesterday on that pump. And so my entry is now just shy of 80 grand. So I'm confident that it is going to ultimately be a profitable trade. But I do think there's a good chance that it gets squeezed a little further and we could see some more upside before it all settles and breaks down. And what makes me think that? Well, here's a couple of things I want to share with you. And this is, I would say, the biggest trap, the biggest problem that a lot of people are having is that they react to price rather than the underlying data behind the price. Okay. So if I see, oh, look, we got to, looks like we're breaking out above this trend line here, I'm going in. And then what happens? We get rejected. Well, why do we get rejected? Well, number one, we of course know that we have the confluence of both the timescape level and the 200-day moving average. That's kind of a natural technical resistance level, but there's some hidden things that if you're not looking for it, you're not going to see. One is if we look at the RSI here, we can see. So for those of you who are longtime followers, you know that I have this level that I've watched methodically, this 41 range that historically, when price is above it on the weekly time frame, when price is above that on the weekly time frame, then we are in a macro bearish trend, and when price is below it, we're in a macro. Above it is bullish and below it is bearish, and so we have indeed broken above that. But what keeps happening week after week is we get to the weekly close, and then we see a change of that trajectory. And historically, when we've had those breakouts, it has been a straight climb out, at least for some distance. And we're not seeing that at the moment. Here's another example of it, right? Straight climb out, and we see price going all the way up. And so historically, we can see this happening in each cycle. Back in the early days, even then, it was not a completely straight line out, but it was much stronger than it is now. And we can actually see that, maybe illustrate that a little bit better if we zoom into this chart, right? As you can see, really aggressive trip out, back for a retest, and a straight rip back to overbought territory. And then back in 2019, similarly, just a rocket rip out, back to a retest, a little fake out, and then back climbing to a new all-time high. And so in this instance, we can see this was back in 2022, straight rip out. And now what do we have going on here? We have a rip out, things reverted briefly, and then last week we got another pump, and now we're reverting again. Now this is daily time frame. Looks what happens when we do, and you could see when I showed you on the daily that we'd broken this trend line here. And if we look at it on the weekly, let's look and see what that means for the trend line on the weekly time frame. And this is what gives me some trepidation about just going long here, right? Like this is one of my really key indicators that I watch. And sure, had I gone long straight from here, then we would have had a beautiful swing trade. But I'm looking to build a macro position here, and so I have not added long here. Maybe I I may regret that at some point in time, but right now I don't. And so I want to look at this. I want to show you something on the weekly chart here. Let me just bear with me for a moment, and let's add this guy in, and we can see that we have broken this trend line as well. So we're off that trajectory, and now a lot hangs in the balance here, right? This obviously is a real-time indicator, and it can change. And so by the time we get to the weekly close, are we going to be on a down, moving towards a downward trajectory and retest this level, or are we going to break back up and try and break back into the bullish trend here? So that's one of them. That's one of the things I'm watching very closely here. Another one is the fear and greed index, and it too is trying to break the trend right now. And so we're going to watch this one very, very closely as well. We're now at what, 47, 48, something like that, 48. So we're going to watch and see if we stay on this trajectory or if we revert back down and, not make higher highs here. Back to the main chart on the weekly time frame, you can see we are, I told you we're flirting above and below this trend line, and on the weekly time frame, we are below it. 81.8K. This is attractive, right? This will attract more bullish sentiment, is my expectation. And so, where does price go from here? Well, we know a breakdown is quite possible, and I'm gonna jump through to a couple of things here, and come back to this chart. One, and for the sake of time, right? So one is going to be order book liquidity and order flow, and look what's happening here. And I might need to refresh this. Hang on a second. On the daily time frame, you can see we have whale order flow still selling, right? So we're selling into strength. And I've pointed this out to you a couple of times last week. We're currently selling into strength. And that, my friends, is not bullish. That's what smart money does, right? You sell when price is going up, you buy when price is going down. That's the smart money move. Might sound counterintuitive to you, but that's how the game is played. Aside from that, we have thin liquidity, right? So this is relatively thin. All these gaps, right? Relatively thin all the way up to 85. And it's not even that heavy at 85. $14.5 million. It takes nothing to cut through that, right? But this is the strongest level of liquidity-based resistance at the moment. And you can see these levels in between, not very big, 4.7 million, about 10 million right there at what, 84. Another 9.7 million here at 83. So fair amounts of liquidity, but not big liquidity. And when you have these gaps here, 2 million or less, 5 million, it takes very little to get through that. And so, and look to the downside here, we've just cleared all this out. So it is razor thin. And so it takes very little to move price when you have thin liquidity. And this is what people don't realize, right? I mean, we've had alts have been pumping, right? And a handful of alts have really been doing good, right? What is Zcash? 36% in the past 7 days. Well, guess what? Let's find some more. Toncoin, 62% in the last week. 5% on XRP, 15% on Solana. But here's the thing. They're moving through thin liquidity on declining volume. And that tells me that these are exit pumps. These are bag holders looking to unload. And so it takes very little to pump price up, and they dump. And so what goes up is going to come down. And some additional evidence of that, we can simply look at charts, right? Here's the Zcash chart, okay? And you can see declining, but like volume is not very big. I got to zoom in to make it sizable. It's declining volume. Boom, 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 boom. Okay, here's the pump, and we're not obviously yesterday was or last week was big because that's when they pumped. But up until this, declining volume, declining volume. Let's look at it on the daily. Declining volume. Look at this. This entire pump, declining, declining, declining. And so now it's coming down, right? Let's look at Solana. Pumping on declining volume. Let's look at XRP. XRP has a mix. Well, actually, you can see here we go. Boom, 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 boom. Declining, declining, declining. Up a little bit, then declining, declining, declining. Big pump yesterday, and then we're back down at the moment. Let's see what that looks like on the weekly. On the weekly, it looks like declining volume. Okay. Same thing for BTC. And we'll even look at Binance, right? Has the most volume. Bitcoin is pumping on declining volume. So that is a clue that there is less interest in accumulation and more interest, in my opinion, at least the way I interpret it, there's more interest in actually distributing here as prices going up. Oh, comments. Who is here? Hey, Keith, do you think the Clarity Act will be sell the news? I do. That's a great question. Unrelated to what we're talking about here, but I've been talking about it a bit recently. We're hearing, we have heard the administration being, El Taco's White House, and his minions being the Cynthia Loomis and Tillis and the like, talking about, and even Scott Pecent talking about the Clarity Act. And then last week we heard a revived mention of the strategic Bitcoin reserve. They say these things any time that the market is at a pivotal point, and especially when it's doing bad. And now there is a clause in the latest version of the Clarity Act that is an ethics clause that is trying to, hold the president and his family accountable. And we know how he feels about ethics. So I'm not optimistic about the Clarity Act even making it through this month. It's supposed to, they told us April was the deadline. It had to happen in April. And then they said it's going to happen in May. And then they said we'll probably have it signed by the summer. Well, they don't have shit right now. Do I think it needs to be done? Yes, I do. I think it opens the door and unlocks the door for just a tremendous amount of institutional money. Banks are positioning for it now, but it is not a slam dunk by any stretch of the imagination. And when it does happen, I do believe, listen, if we could get an end to the war and the Clarity Act signed in the same month, I think we could have a real tailwind for the market. But so far, both of those things seem very, very difficult. Proud new, we got new ask bids laddering up. Seems bullish. Yes, it does seem bullish, doesn't it? Oh, wait a minute. He means bids. Bids, yes. Okay, so let's take a look at fire charts here. You make a good point. I don't see a tremendous amount of new bid liquidity coming in here at this point. I see a little ladder of ask liquidity up here, but I don't actually see a lot of bid liquidity. Let's zoom out a little bit and see if we can see more. Not really anything, in my opinion, noteworthy on the bid side, but I do see more ask liquidity working its way up into that 85K range at the moment. So the price action is bullish. However, the underlying data we're seeing around it is not so good. Ask side, well, you could say that's bullish. So it says, I meant asks. Yes. So whatever you mean, and for clarification, anybody who might be confused, bids are below price, pushing price up. Asks are above price, and that is profit taking. Okay, or selling up here. And you could say that this attracts people up. This attracts price up, and maybe it does, maybe it doesn't. Oftentimes, we'll see these. If they're not getting filled, they might start dropping down below. But this is, anytime we see price moving into new ranges, we see ask liquidity moving up with it. And so, yes, there is some consideration of this happening here. Now, I want to show you something that hasn't been really discussed by too many people, and that is, there's a lot of sentiment for this 85K level, in part because there's a cluster of short liquidations sitting at that level. But if we go up just a little bit further from there, 87.5, then we have something right here. We have, and there's hardly anything right there right now, right? Less than 6 million stacked at 87.5 at the moment. However, if price gets up to 85, then I imagine we're going to see some ask liquidity laddered up to this level as well. Let me show you why that level is so interesting to me. At 87.5, we have the yearly open, and we have confluence with the 100-week moving average. This makes a very strong resistance, just like we have happening here on the daily time frame around this structure. We have this strong resistance between the 200-day moving average, and if I turn the timescape levels on, you'll see that we have a timescape level here as well. So similar set of circumstances up on the weeklies, where we see that confluence between that yearly open and that 100-week moving average. So I think this is a potential target, and probably if we do make it up that high, I'm at least positioning myself for that being the top and the rejection point. Like I said, everybody's aiming for 85. And so a squeeze to 87.5 would just be punishing. It, in my opinion, takes a reclamation of the 50-week moving average, which currently sits around 94.7K, to reclaim the bull market. So I would need to see weekly closes above this level to call it a bull. So getting back into some of the underlying data, and again, I'm short on time today, so I'm gonna rip through this a little quicker. And thanks for your question, Proud Noob DXB. So I want to show you some other data that looks interesting to me. In the MI dashboard, if we head over to the global analysis tab, we can see that we have our rolling beta, 14-day rolling beta to BTC for all altcoin pairs. And so you can see that we are again, we had this period of low beta increasing, then we pulled back a little bit, chopped around here for a couple of days. Now it's moving back up. If this is too complex for you to understand, let's just look at this. Let's just look at the visualization here. Okay, you can see we're getting more red, which means low beta, right? High beta is up here in the above 1 to 2. And low beta, this is normalized down to 0. We see more red. And when we get to those periods of low beta, this signals some toppiness, right? So you can see here, we got toppy. You can see here, it took a while to develop, but it ended up topping. You can see here's a short version, getting toppy. So we haven't reached this blow off top level where we start seeing these red dots, but we're starting to see the orange and yellows. And so sometimes this happens quick. Sometimes it takes a few weeks to develop, right? Here's one that took a little while to develop. But it ultimately marked the top, and price came back down. Here's another one. Had a blow off top right here, and look how high the low beta, that's the red. This went up to the top, right? And in terms of relative share. So we're seeing an increase in that at this moment, and So, like I said, we may not be there yet, but these are signs of getting toppy. Another one I want to share with you real quick is the alts to BTC correlation. And again, we see something similar here in the data visualization where we're in a period of optimism down here. You can see the correlation is dropping. The correlation between BTC and alts is dropping. And we've not yet reached a blow off top, but we are approaching uh, a zone or a range where that could occur. And again, we're watching these areas where we start to see this red come in. That is a decrease in the correlation. And we have, at the moment, we have some alts are popping, some alts are choking. And Bitcoin has been on this really kind of a steady grind here for more than a month. And so we're watching this very, very closely and looking to see, what is it going to take, right? We're very close. You see these dots are getting brighter and brighter. We're into the orange. Are we going to get some red here and signal a blow off top anytime soon? That's a distinct possibility here, and that's what I'm watching for. But this is an indication to me, once again, that we are in a not necessarily at the top, but getting toppy. Alex is asking, do I think the Ask Liquidity in Solana is strong? Let's see what that looks like. Go back over to Fire Charts and see what it looks like. Helps if I spell it right. Not looking tremendously strong here, but the order flow right now is pretty damn strong. Had a bit of a let's widen out a little bit. How much was this sell order? We don't see a lot of. I want to see how frequently those brown mega whales are playing. And in the last month, they've had 1, 2, 3 orders in the last month out of brown mega whales. How big were they? So if we switch over to absolute CVD, we can see they went from 0, probably about $1 million, 2.2 million on the first buy order. And then they came back and they unloaded. No, actually they bought more. So up to 5 million. And then looks like we had some outages here. And then what happened? And then they just sold, looks like a couple of million, right? Not even. Yeah. So to answer your question, do I think Ask Liquidity is strong? Well, we're looking at the biggest concentration here, and that's $4.5 million. So no, I don't think it is strong. Imagine the hurt if we've already topped out and people waiting higher. Oof. Well, listen, people are getting trapped in every one of these moves. I can promise you that. Every one of these moves, the hopium addicts are out there, and there are certainly some bullish signs, but there's no confirmation, and there is still some level of structural integrity that, while we're flirting with a breakout, has not actually happened yet. Right? We still don't have a single candle with a full body above this line that says, okay, we got it and we're not going back. And so for me, we're not there yet. And for me, you've got to wait for those to happen before you can really have clarity that the bottom is in or that this is a legit breakout, et cetera, et cetera. And it's just not here yet. So, the cycle argument and the wait till Q3, Q4 argument is a whole nother discussion. And I'm trying to show you that even if we don't look at that narrative, if we ignore the narrative for now and just look at the charts and we look at the data, we're seeing signs that don't look as bullish as the price does. So avoid just reacting to price. because when you just react to price, you've got a real chance of getting wrecked. So, is the top in? I don't think necessarily that it is, right? I mean, it could be because we're flirting with this and we haven't had that breakout yet. But because of that sentiment that's there, there's things that could attract us up. We have that CME gap that still needs to be closed. That's around 83,980. We have a cluster of short liquidations up around 85 that I told you about. And of course, we also have this attractive yearly open and 100 week moving average that is just begging for a test. And so I don't know that this could be a nice swing trade for somebody or a nice scalp potentially, but in terms of longer term positions, I'd be very, very cautious about buying the top because this looks like the top right here. And if this isn't the top, then it's probably, or I would say there's a high probability that it is here. And as far as whether the bottom is in or not, listen, there's a lot of us that have conviction that price is going to break down further, but the longer we spend up here, the less likely it is to go as low as many of us had forecasted maybe a few months ago when we thought we were going to break down from here, for example. And so I'm watching that, right? Is there a chance that this 59.9 holds? Sure, there's a chance. At the moment, that 200 week moving average is now moved up to about 61, which is interesting. And in terms of the downside targets in the 50s, the 40s, the 30s, and there's a lot of discussion of where we could land in that range. It's hard to envision that. It's hard to visualize that. I realize for people when we're sitting here flirting with a breakout. But if that does indeed come, it's going to be an incremental breakdown. We'll test support here at this 78.3 level, that adjacent timescape level. We'll test the 21-week moving average, and then we'll test the structure, which has confluence with another timescape level. And so, and then, we take it from there. If we break down, all of these timescape levels are potential support. And if we lose this, then we start getting into those targets that we had talked about a few months earlier. So it's really still in flux, but we have no confirmation that we're in a breakout. We have no confirmation. We're a long way from a validated bull market recovery up here above that 50-week moving average. And the signs point to bearishness. So folks are going to get wrecked on the way up if they're not paying attention. And I would just encourage you to look at the underlying data. Don't react to the price. Do not be emotional about getting squeezed. If you're losing, cut your losses or DCA. If I prefer DCA strategy, so I'm not so reliant on a specific level, and you have to manage your capital, to do that. I got to leave it right there, guys. It's been a good one. I appreciate y'all for following. Thanks, as always. And if you haven't done so yet, smash those buttons. Especially make sure you hit that subscribe button so you never miss a future stream, because I'm dropping the free alpha on the regular for you. Have a great day, guys. I'll be back with you anytime I see something new and noteworthy I need to inform you of. You will find it great, the best place for you to engage with me and get this in when it's most actionable is by joining us in the Material Indicators community on Telegram. Links are in the description down below. Have a good one, guys. We'll talk to you soon.